Hey, good afternoon, everyone. It's Tim, so it's good to be back in the office. Let's just jump right into the USDA report that we came out with today. So the big shock in this report is this 1.9 bushel per acre increase in acreage. Now, so I just got back from a 3-day, 2,000-mile journey that went from Kansas to Indianapolis, back through across Illinois, into all across Iowa, and then back in south. And before I left, I would have said no chance at all that the USDA is going to raise yield, like, hey, maybe just a little bit. But then as I was traveling and talking to farmers all over the place, the feedback was unanimous. Hey, our yields basically kicked ass. Like, we had a great harvest, and I talked to nobody along that trip that had anything other than great things to say about their yield. So coming home last night, it was like, man, they might actually have to raise yield. And so I don't. It's surprising to me that how much they raised it, but it's not surprising overall. So here's what we're dealing with today. We're dealing with a carryout that grew. We're dealing with a very healthy stocks to use ratio that is not indicative of a big rally coming. We're dealing with better demand numbers and still larger carryouts. So if you look at everything that the USDA has done to the corn market, okay, look at the acres planted that it had back in June, 92. Look at where we are today, 94.9. It's a 2.9, is that right? 2.9 million acre increase? This is crazy. So they've increased acreage 2.9 million. They increased yield. They decreased it a little bit, and now they've brought it right back up, and then they've started bringing demand back up. So the numbers for corn just aren't really very good. And now you're starting to have a lot of people talking in the trade about, hey, what about next year, right? What if we plant 91 million acres and hit trend line, and you're at 184 on yield? Well, I mean, I don't really want to do this, but let's do it anyway. So let's say, hey, we plant 91 million acres, and let's say we hit 184. Yeah, it just gets really ugly. But if I start with a 2156 right here instead of where we were, that is a 3.2 billion bushel corn carryout and a 22% stocks to use. And that is, oh wait, I can add demand here, 465. Oh, yep, that takes us down to 3.1. So this is the number, real close to the number that they printed in August of 2020, and the market reversed and said, no way, that's not what it is. I don't think that we're going to go price this in yet, but I'm just telling you, if we break lower, this is what the trade's going to start talking about, and that is what would accelerate us to the downside faster than anything else, because it's going to go try to kick that number out. Now beans, right? What did they do with beans? Well, they increased yield by 0.3 of an acre, or by 0.3 of a bushel. They held demand about constant, and they ended up raising ending stocks just a little bit. So that was a kind of a warning shot to the trade to kick out a little bit of premium. At least that was the knee-jerk reaction. Now, in contrast to that, the El Nino, or the weather situation in South America that is starting to push Chinese buying to us, may dampen the enthusiasm of the bears here just a little bit, because we have moved 2.6 million metric tons of beans in the last 2 days to China, or booked sales for the December, January, February timeframe. And remember, it's for every million metric tons, it's 32 million bushels approximately, right? So you're talking about basically 50 million bushels of beans that have been sold. And so, but the market didn't react bullishly to that, and that's not a good sign. So overall, the report wasn't all that friendly to anything. So let's take a look how the markets reacted. So this is December 23 corn. How did it react? Well, it reacted poorly, but on the other hand, we didn't take out any lows. I'm going to zoom this in here just a little bit. We did make a quick new low, but on a closing basis, we couldn't hold it. So if there's any bullish hope at all, that's what you got. You got that they didn't hold the close, but that could have just been kind of just not yet, and so I wouldn't be surprised to see us just take it lower today, or tomorrow, because that outlook is not rosy for corn at all. So what do we do? Well, we're hedged, we're sold, right? So I have no interest in lifting those hedges or modifying them. Obviously, any length is going to be gone below today's low. We're going to wait and see what happens there, but we got to get those things hedged, and we got to get them. We got to move. Now, what about 24? Because if we're headed to a 3 billion bushel corn carryout in 24, we have a 509 price here at the close today. And here is big picture what we did with corn. You can see the short-term stuff right in here, but I'm going to zoom this out so you can see in a bigger context what December 24 corn is doing. And I don't think it looks great, right? If you attach this trend line all the way back to the end of 21 and you bring it on up, here we are right at the bottom edge of that trend line. We don't have much in the way of support right here, and there's not a whole lot of reason to rally it, right? The South American corn crop's not in trouble yet, and our corn crop seems to be just getting bigger, not weaker. So some of the bullish fodder here isn't really in the cards. So I think that we've got to hedge it. I think that this has got to have some protection on. If you don't want to be super aggressive, and you want to wait, I would not let this stuff get down. No, am I saying that we're just going to go straight down and never rally? No, not at all. We got way too much time. But I don't know where that rally comes from, and I don't know what the catalyst would be, because that carryout, right? You're talking about 3 billion bushels. And a 22% stocks to use ratio. That is not $5 corn under any cost of production scenario. The market's job is to kick acres out of production here, not incentivize them. So it's not going to give you a margin. It's going to take it away. So if you want one, you better go get it. You better contract with it now in order to make sure it's there, and then defend it using options. So so as bullish as I was a week ago, I just think that I just don't think that that's a legitimate argument to maintain, especially if we start breaking down below these trend lines. So we need to be hedged. Now, the algorithm that we've been talking about, what does it say? Well, it says hedge. Let me show you exactly what that signal looks like so you can kind of get used to it. Here we go. Here's the hedge line. It's been on both sides of it. Actually, right here is the hedge signal for the algorithm, right here at 520 December corn. So it is telling you to be hedged, and it's telling you to be hedged just straight futures. And then if we move back up above 520 and take this high out, then to put calls on it. And if we start getting higher up out of this trend line, then we'll get even a little bit more bullish. But the reality is we want to be hedged, and we want to have calls against it, because that's consistent with the system that we know works and has been tested with time. Let's face it, every time you have a bad result, what you do is you end up long below that hedge line or short above it. It's super simple, and so you got to be vigilant about it. And you can use calls to offset that, but for now, we just want to be short. Unless we see immediate strength up and out of here tomorrow, I think that these lows are definitely in jeopardy. All right. Now, what could be the bullish case? I'm going to jump to wheat now, because I think wheat could be the bullish case, even though I really think it's going to be more of a follower. It's all the conditions are met here for a significant rally in wheat, right? You've got a little move higher, you have a higher low, and now you have a higher high. So we should see some propulsion up out of here. And if it does that, that'll help mute any down move in corn. But if it doesn't and corn breaks lower, then this thing's just going to roll right on over and come down with it, because wheat doesn't have any reason to trade opposite directions to corn, in our opinion. We've been hoping that wheat would rally, because fundamentally, wheat looks really, really good fundamentally. It's the total opposite of corn, in our opinion, but the market doesn't care, and the market's not wrong, so you have to, so we have to respect it. But that is the only bright spot here, is that didn't die. Okay, now let's look at soybeans. Here's January soybeans. What are they telling us? Well, we've been bullish beans for quite a while, right? And And we still are, but this is concerning. The fact that we were unable to break above the trend line, we're unable to break above this TDST line, and we're unable to break up out of this developing base channel. We need to get up and out of here to bolster the bullish case. Otherwise, we fall out the bottom side of it. It's problematic, and I think it takes us to new lows. You know, beans have had a lot of bullish catalysts, and they've responded, but they need to continue to respond. Otherwise, it's going to follow everything else lower. So let's look at November 24 beans, this chart right here. What is this telling us to do? Well, honestly, these look a little bit better than the November contract, but so you have to kind of take your pick. You know, right here's a nice hedge line or a nice trend line to trade against. Anything below that probably ought to be hedged. Anything up above it is probably more bullish than bearish. So a nice strategy is to buy a $13 call and sell the futures against it, and then just sit and be patient and hold it. Certainly a move below today's low or a move below 1272 is something that needs to be hedged here too. Because remember, if corn acres really, if corn needs to shed acres, where are they going to go? Well, they're going to go to high-priced beans first. So that puts a lid on bullishness down in South America. That's the problem that beans, I think, started to show a little bit of sign of today, and will continue to accelerate to the downside if that's the case there. So there's always a why that materializes. There's always a reason that's fundamentally driven, but the technicals actually give you warnings of it, right? This red 13 right here 3 days ago, that was a sell signal right up against these highs. Sometimes you got to back the bus up before you blow through. So I think if that happens, it's because the market's buying in drought in South America. And if that happens, probably mutes corn's downside and ignites wheat too. If the market thinks that it doesn't need to price that in for some reason, then goodbye. It's down below these lows, and it's on down lower. So I'd be quick to hedge this as well, because we don't want to let those big prices get away from us. So hate to be that bearish about things, but with a carryout number that is, let me just pop right back to it so you can see it. With a carryout number that looks like we're growing from 2.1 to 3 billion, is not a good situation for the corn market, and the market's job is probably not to let that happen. So, and it's going to do that likely with lower prices, because that's how you're going to have to generate demand or cut supply. So, I think the corn market could get pretty interesting moving forward here. All right. That is what I've got for you today. Hope that's somewhat helpful. Remember, it's early. We're going to go both directions. We're going to rally. We're going to sell off. We're going to have volatility and opportunities. But for today, if you've got downside risk, today's the day to say, hey, I'd rather be hedged and have to defend it than just watch it slide away, particularly for 24 corn, in our opinion. With that, remember, there is always risk trading futures and options, and you should only do so in light of your own financial condition. Hope you guys have a great night. I will talk to you. I won't be in the office tomorrow. I've got to go to a school board convention all day long, but Jeff will kick out a video later in the day, or Phil. And if you're lucky, they'll convince Andrea to kick out a video for you guys tomorrow. So we'll see how that office battle unfolds during the day. Have a great night. We'll talk to you later.